Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, China opens a probe into Nvidia regarding anti-monopoly laws. That's as the global tech war escalates. This adding to broader geopolitical risk weighing on US tech stocks. We get the market impact. And Alphabet reveals new details on the progress it's made in quantum computing. But first, we check in on Nvidia. Top story for the day. We're currently shaving off a cool $100 billion in terms of market capitalization for what is the most valuable company out there listed in the United States, down 3%. Why? Worries about an investigation, a probe being opened up by China about a deal, an acquisition it made back in 2020. But this really fits into a context of global tit for tat between China and the US. Peter Elstrom joins us now. Just go into the intricacies of this particular investigation regarding a deal made years ago.
Yeah, this was a bit of a surprise. We got this news last night from state television in China, where CCTV disclosed that the agency SAMR has opened this probe into Nvidia and what it calls potentially anti-monopolistic behavior. It's a little curious because, as you say, they're focused in, or they mentioned specifically, a deal that they did 4 years ago to buy a company called Mellanox. It's a company in Israel that makes networking equipment. China had to approve that deal when Nvidia decided to do it, and they did approve it, as you mentioned, in 2020. But they did with 7 different conditions about Nvidia's behavior going forward. That included giving customers in China access to product information from Mellanox and product access for Nvidia's own chips. Now, it's not exactly clear what they're going to dig into in this case, but as you noted, Nvidia has been this company at the heart of the U.S.-China conflicts over technology. Washington has cut off Nvidia's ability to sell its most advanced chips into China, so they're really at the heart of this conflict between the two biggest economies in the world.
Now, it's worth noting that the U.S. Justice Department itself is looking for information to Nvidia and potentially violating antitrust laws. It's not the only country investigating Nvidia, but set the context of what other companies are being focused in on this tit for tat, because Micron, for example, is having difficulty with its relationship with China. This just does seem to be around the context of China trying to be one up on what it and respond to the U.S. limitations of technology into its country.
Yeah, as you say, the anti-monopoly concerns around Nvidia are quite broad. It's not just China, it's also the United States. France here has taken a look at it. That's because they have essentially a monopoly, 100% share, almost 100% share in the most advanced chips to train AI models. But you're exactly right. Also, there's this broader trade conflict that we've seen that creates all sorts of problems for companies in between the U.S. and China. Nvidia still sells a lot of chips into China. It had sold more in the past, but 2 years ago, we got this news that Washington was going to cut off their ability to sell the most high-end AI chips used to train AI models. Those restrictions have been steadily tightened since then, so Nvidia has suffered because of that. But it's beyond that, too. It's the chip equipment makers that have been restrained. ASML here in Europe has been restrained from selling their most advanced gear. So in response, Beijing has taken a number of actions now. We're seeing them retaliate in certain kinds of ways where they cut off a couple of minerals that are very important to the chip industry and the defense industry, in particular, gallium and germanium. So they're beginning to show that they also have some cards to play, some levers to pull in this broader trade conflict.
Peter Elstrom, always bringing us the context. Thank you so much. And look, let's just stick with China and the US, because President-elect Donald Trump said he did have an exchange with Chinese leader Xi Jinping in recent days, the first clear indication of direct contact between the two men since Trump's re-election in November. Here he is in an interview with NBC's Meet the Press with Kristen Welker. Have a listen.
I had an agreement with President Xi, who I got along with very well. We've had communication as recently as this week. And I had communication with him where they were going to give the death penalty to anybody sending drugs into the United States.
Let's get out to Mike Shepard in Washington. And that was notable, the fact that conversation has already started in the environment where we're seeing actually China having to respond to its own economic issues, particularly as they have to look to what Trump might do to their economy come 2025?
Well, it highlights the uncertainty surrounding the U.S.-China relationship as we enter this changeover here in Washington. On the one hand, Trump is coming in with very much a hawkish agenda toward China. When you look at his promises during the campaign to impose tariffs of as much as 60% on Chinese goods, and his follow-on promise to put 10% tariffs on Chinese goods over his complaint, as mentioned in that interview over the flow of fentanyl from China into this country. But at the same time, Beijing is sort of looking to the change in administration as possibly a way to engage with an incoming president who has shown a tendency to be a little bit more transactional. Maybe they can engage with him in a way they haven't been able to with President Joe Biden and his team. So they have signaled that. And in fact, when you were talking just now with Peter about some of the restrictions that China recently imposed on some of those sensitive critical minerals like gallium and germanium, their statement also included an overture to the U.S. that we look forward to engaging more positively at some point. So there is sort of we don't know exactly which way this is going to go, but the direction of travel based on the people in Trump's team looks to be pretty tough.
Tough, and particularly around tariffs. Just take a listen to what he said in that particular interview on tariffs too.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China. We took in hundreds of billions of dollars, and we had no inflation.
He was responding there to consumer impact in terms of inflationary pressure, but businesses are eyeing this very closely too, Mike.
They should be, because businesses really are consumers. A lot of those goods that are coming in from China as key inputs to their industries and key components. And an increase in tariffs would not just hit consumers at the end of the very end of the supply chain. It would also hit businesses, and they would have to think about, well, what do we do with our costs? Do we pass those along? And from that interview, you really get the sense that Trump is not inclined to back away from any of those pledges. He was pressed during the interview about the impact on consumers, and he insisted that no, there was no cost to consumers. He was asked that. He said so twice during the interview, that there is no cost, and he actually tried to tout the benefits of it. And moreover, he actually pointed to tariffs as a way to gain in other areas when it comes to non-economic policy as well. So it'll be interesting to see how he approaches this, not only as an economic tool, but maybe as a way to gain leverage in other policy areas, including immigration and who knows what else.
Who knows what else? Mike Shepard, we appreciate it. Now, all of this geopolitical risk, we haven't even mentioned Syria yet. There's also this week the likelihood of another sticky inflation print here in the United States. All of it is sending US tech stocks lower on the day, despite, of course, what had been a bit of optimism around stimulus potential from China. Let's get a market take. Brian Kersman is with us, portfolio manager at GQG. Your read on the market trends. Look, any of these latest issues, Nvidia China, giving you pause, Brian?
Yeah, so for the starters, in terms of technology, we did have a very heavy weighting to a lot of technology names earlier in the year. In terms of our U.S. equity portfolio, more than 50% of the portfolio was in, IT and also communication services types of names. And we have seen a lot of hype kind of build up in a lot of these tech names in recent months. We've adjusted and gotten a little bit more of a neutral posture at this point in time. So, coming back to Nvidia specifically, they do seem to be still garnering the majority of economics within sort of this capital cycle and this tech cycle that we're seeing at this point in time. And I think you're seeing that in terms of the power and their ability to sort of, capture the market and sort of, circle the wagons, if you will, in that sense. With regards to China, they do have a slightly reduced exposure to China than they've had in recent years and months. And I think that's because you're just seeing the overall strength in the other areas that they're selling through to the hyperscalers and things like that. So China is now 16% of their revenue at this point in time. So I think this is a little bit less of an issue than maybe what we saw a couple of years ago when you saw some of those U.S. restrictions sort of pulling back, Nvidia's ability to sell into China.
So ultimately, the valuations, when we're still seeing Nvidia in excess of $3 trillion. That's vindicated by the extent of the market opportunity, despite perhaps some curtailment to China, for example.
Yeah, so when I think you look at Nvidia, you look at sort of the hardware implication and sort of the technology that they have, and they have a better mousetrap in terms of the GPUs that they're selling into folks. I think you're seeing that in terms of the strength of their business. What I think goes under appreciation is the software element of the thesis as well. That gives them a lot longer tail in terms of the ability to continue to sell through. That software angle of the thesis pulls up the margin structure of Nvidia over the course of time. People talk about CUDA sort of being that base software layer, and then these software stacks that they're building on top of this. This all creates a very system-wide approach, and it's hard to sort of disrupt that. Creates really good economics for them, and I think there's a plenty of headroom for them to continue to grow on an ongoing basis. And I think it gives a little more stickiness than maybe some of their peers, even within the GPU space.
Interesting, Brian. Take us therefore to software more broadly. We have seen this shift out of perhaps chip stocks, semiconductors, into the software space, thinking how generative AI is going to make their valuation suddenly ever more inflated. Is that the right way to go?
Yeah, so in terms of the software names, we have seen sort of multiples really inflate and sort of expectations go up in terms of the ability for these folks to sort of capture the economics from, Gen AI and things like that. I think we're still in early stages. I think we need to see where some of the impacts are going and where folks are able to sort of monetize the economics of how generative AI work. I think enterprise is a little bit slower to adopt, and it's going to take some time to get there. Where we see the impact more immediately is on the advertising space. So we are seeing that by using sort of Gen AI, using this unstructured data to predict what people want to see, what people want to sort of buy in terms of the advertising and things along those lines, matching up that media content with those advertising components. That's an area where we're seeing real returns at this point in time. The economics are actually going in that direction. So that's more of where our focus has been on a year-to-date basis and where we're positioned in the portfolio at the moment.
Interesting. I mean, of course, we've seen Meta outperform on the back of that, Alphabet as well. Brian, what was so interesting about what you said earlier was that the fact that you have gone more neutral. And I'm interested as to, therefore, are you putting allocation into other AI tangential industry groups if it's not just all about semiconductors and software right now?
Yeah, so when I describe sort of the neutral posturing, I think that's the overall sort of exposure that you see in the portfolio has come down. We still have higher conviction calls in those select names like an Nvidia, like a Meta, even like a Microsoft to a little bit lesser extent in our portfolio. You see some fairly decent sizing in those. Honestly, I know this is a tech show and a tech program that we're talking about, but we are seeing some more interesting areas and some of the more boring areas of the economy as well. So consumer staples, to some extent utilities, not necessarily because they're defensive by nature, but quite frankly because they're a little bit or less trodden. The multiples look more attractive, and you're getting a little bit more bang for your buck, so to speak, in terms of the returns. You get to a high single-digit, low double-digit type of return with a dividend yield on top of that for a reasonable multiple. You don't have to worry about the hype. So it's almost like a barbell approach, if you will, having some of these punchier names, some of these higher conviction names within the tech ecosystem where we are seeing the economics coming through. And then you're seeing some of these other things where you can get some really good quality compounding at a reasonable price.
Diversification key, no matter who the audience is. Brian Kersman, we thank you, GQG portfolio manager there. Appreciate it. Meanwhile, let's just check in on super micro shares for a moment. Jumping earlier in the trading session, we're now up just 2%, but all of this after the embattled server maker said that the Nasdaq has granted the firm more time to become compliant with listing rules. Ultimately, this is all regarding whether or not they've got time to serve their 10Q filings. We're seeing that the company has now been given until February the 25th to file its financial report for the fiscal year ended June 30th. Alphabet, well, it's revealing new details on the progress it's made in quantum computing. The exponential advancements are being done with a new Willow quantum chip that is helping overcome some of the biggest challenges in the field. Now, the next step is, of course, coming up with real-world use for all the theoretical power. Here to talk about all of it, Hartmut Neven. He is the Vice President of Engineering at Google, as well as the founder and manager of the Quantum Artificial Intelligence Lab. And the biggest challenge thus far has been ultimately error correction. Can you just talk us through what you have just achieved?
Yeah, the biggest news for today is that we developed a new, very high quality quantum chip. And this enabled two breakthrough computations. And one is an error correction, where we showed for the first time that as we use more qubits, the error rate comes down, and it comes down exponentially. The second important achievement, breakthrough achievement, is that we did a benchmark computation. Took just 5 minutes on our new chip that would take the top supercomputer 10 septillion years to perform. So 10 septillion, audience may not know, that's a 1 with 25 zeros. So it's a mind-bogglingly long time.
And it took 5 minutes. What I want to understand is what this benchmark test is, benchmark random circuit sampling. What does this prove?
Yeah, so this benchmark problem, we often say, is not a problem that people on Main Street have yet. But it's a suitable benchmark to compare different quantum processors to each other, or to compare quantum processors, quantum chips, against classical computers.
What's so mind-boggling about quantum more generally is that we have been talking about it for decades, but it always feels another 5, another 10 years off. Is it different this time, Hartmut?
Yeah, quantum computing is definitely not that field. There is steady progress, and our new chip that we just released, Willow, will form the basis to start doing useful computations that will enable or solve problems that humankind has.
Let's talk about those problems then. Everyone immediately goes to healthcare, drug discovery. Is that the most obvious place with which this sort of computing is going to be helpful?
Yeah, so the well-understood killer application of quantum computers is to model systems where quantum effects are important. And that is more often the case than you may think. For example, if you want to understand how drugs, pharmaceuticals, bind to cells, or if you want to design a nuclear fusion reactor, or something as mundane as improving the batteries for an electric car, all these engineering challenges involve quantum problems. And their quantum processors are just a tool of choice to solve those problems.
Hartmut, put it in the perspective of generative AI, the hype that our audience that we have had over the past couple of years. What does quantum mean for that? Is it superior even in its effects versus generative AI? And does it suffer the same issues in terms of energy and infrastructure?
I wouldn't compare it in those terms. AI as well as quantum computing will be the most transformative technologies of our time. But there's a lot of cross-fertilization between AI and quantum computing. So AI can help work for quantum chips to work better, and vice versa. There are many key computational tasks in AI where a quantum chip will just be the tool of choice to handle those.
It's a phenomenal step. Please come back as you start to apply the significance of this computing. Hartmut Neven, he's the VP of Engineering at Google and founder of the Quantum Artificial Intelligence Lab. Meanwhile, coming up, we're going to be discussing the limits of power grids and how they're running up against the ambitions of both big tech and Wall Street when it comes to generative AI, what we're just finishing our conversation there on. Meanwhile, just check in on some key stories today. Comcast, one of those off by 7%. Key drops on the S&P at the moment and the NASDAQ, shares sliding. And this after the Comcast Cable President CEO David Watson is saying his project's broadband subscriber losses are more than 100,000 in the fourth quarter. Hurricanes Helene and Milton causing around 10,000 broadband losses. We're also looking at Vivendi. Big news out of France as this company does look to break itself apart, saying it's very likely, though, it would drop out of the CAC 40 after it did indeed approve that 3 spin-off listing December the 16th. Investors approving that. A planned spin-off of 3 multi-billion euro units. This is Bloomberg Technology. Time now for Talking Tech. First up, HelloFresh. Well, it's facing allegations that one of its facilities in Illinois used migrant teen labor. Shares fell after ABC News reported it is under investigation by the U.S. Labor Department, along with a staffing agency that hired employees for the facility. Plus, Binance Holdings CEO Richard Teng told Bloomberg that, quote, the future is bright for crypto and encouraging other countries to follow the lead of the U.S. Just take a listen.
We have now very crypto-friendly president in the States and extremely smart strategy appointing an AI and crypto czar on that front, because this too represents the most innovative technology for the future.
And Jack Ma made a rare public appearance Sunday to mark Ant Group's 20th anniversary. He spoke optimistically about the future of the company while acknowledging its challenges and also the hype around the company's AI-powered products. Let's just talk about AI a little bit more, because Blackstone has been big data center investor and its ambitions are huge, but not everyone is into it. After it bought data center developer QTS in 2021, it's turned it into a major profit driver for the firm. But around Fayetteville, Georgia, the data center has stirred discord in the community over its unprecedented power needs. Bloomberg's Josh Saul is here with more. To deliver this sort of infrastructure, it impacts real people, real citizens, real ground.
Yes, people in Fayetteville were unhappy when the local power company came around and started knocking on their door saying they wanted to buy easements, basically wanted to run big transmission lines through their yards, and that's because these data centers take so much power. The one that QTS is building in Georgia will take about as much power as 1 million homes.
Wow. What does this mean in terms of scaling that across different states, different towns? Because there's not only just one data center in Georgia right now.
Exactly. Georgia isn't even one of the hotspots. It's not Data Center Alley. It's not in Arizona. So it means that there'll be more and more of this, more power infrastructure being built all over the U.S. and people unhappy when power lines run across. But at the same time, data centers and AI we all use all the time. So there's certainly no indication that it's going to slow down.
So is there a price point? Or is there just money, recompense? What happens?
It seems like pretty much all the systems are set up for more data centers to get built faster and faster. Power companies have a lot of power, to build transmission lines across, in order to provide electricity. So it seems like most of our systems and most of the profit incentives are set up to have more data centers and more transmission lines at a pretty rapid pace.
And more discord, perhaps, among communities. Josh Saul, it's great reporting. I urge you to go and read the story in full. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. As the course of the show continues, we've actually seen a build-up in sort of risk aversion surrounding tech at the moment. We're off by 0.7%. All fixation on the CPI print, that inflationary print here on Wednesday in the United States. What does that mean for Fed policy going forward? What about the geopolitical risks that are currently affecting Nvidia, for example? Once again, a new probe being announced by China. The tit for tat continues to build anxiety. We're seeing, though, crypto off by about 2%. Look, we're still at a 98,000 level, close to that 100, but they're too seeing a little bit of a sell-off as we get out of those riskier assets. Move on to some of the individual movers that I want to shine a light on. I mean, PDD, don't remember, there is some optimism, particularly around China and its own monetary policy, fiscal policy stimulus. Some of the most positive that we've seen in more than a decade, according to Morgan Stanley. We're up some 11% as Chinese names do well off the hints coming from the Politburo. We're looking at Workday up 6%. This is we get new announcements of who is in and out of the next S&P 500 sort of reorg. And we're seeing Workday, software company, up 6% because it will make the S&P 500. Everyone would rather hope AppLovin in its investor base had thought it might, but it's down 14% as it doesn't make the cut. Meanwhile, let's just talk about Reddit as well. Currently testing a new AI-powered chatbot called Reddit Answers to help users find information and surface discussions from across the platform's forums. That's bring in Bloomberg's Asia Council. What's so interesting is I feel as a user, you and I use generative AI of Google's, I often get Reddit citations, and I'm being pushed to Reddit more and more. But this is about keeping people within the platform.
Absolutely. Like you said, right, you search on Google and you end up on Reddit. Sometimes I search Google specifically. So if I'm trying to find LA versus San Francisco, I might search for that and then add Reddit at the end. And that's how I find stuff on the site. Because sometimes on Reddit's site, it can be a little bit difficult to find things. They have like 100,000 communities, billions of posts. And so with this new chatbot, you can just search on the Reddit site and find all the things that you're looking for. It'll give you a summary, it'll give you links, and it just makes the experience a lot easier.
What's so interesting is Reddit, of course, has been signing deals with generative AI companies, Google, for example, getting money for its own website and data to be used by these generative AI large language models. What then are they doing in terms of their own LLMs to build its product? Are they agnostic? Are they using one or a couple?
They're using a few. So they have their own models. They also use models from OpenAI and Google. So they have really interesting partnerships with these companies where they're using their large language models. But then, like we mentioned, if you go on Google and you find Reddit results, that's because of a partnership that they have with Google that allows Reddit posts to appear in Google searches. So it's a mixture of all those different things. But they're definitely building their own models internally, and then they're using some from some of these other companies.
Becoming ever more integral to the business model, generative AI. Aisha Counts, great to have you. Thank you. Now, let's just stick with social media a little bit more, because TikTok's Chinese parent company ByteDance now faces, of course, a ban in the US next month as a result of a federal appeals court decision Friday. But the ruling has sparked opposition from civil liberties groups and users, with only 32%, in fact, of US adults supporting the ban, according to a recent Pew survey. Let's bring in Anupam Chandra. Is professor of law at Georgetown University. And what's so interesting is this, of course, ban or divest. You have written at length prior to this, talking about some of the legal issues, perhaps with the government arguing, highlighting in particular two key sentences in the briefing to the DC Circuit that you thought basically cast doubt on the national security arguments. Can you just go through them for us?
Sure. So I think some of the key issues in the case revolve around whether or not there is, in fact, a national security risk from the app. And the national security risk, as the government tells us, is that the Chinese government might manipulate the app to push Chinese propaganda, or that it might manipulate the app to surveil Americans. And in order to avoid this, the United States government has been negotiating for the last handful of years with TikTok to kind of locate the data entirely within Texas, essentially, and also put all these controls over that data. But the United States government has been dissatisfied with the level of protection. But the U.S. government says that it has no information that there has, in fact, been any Chinese government manipulation of the app. So it's all speculative, and that's part of the difficulty for the government in this case.
But is potential and speculation enough, ultimately, to argue that we're protecting citizens here?
Exactly. The DC Circuit Court of Appeals believed it was, that the government was uncomfortable, did not trust ByteDance, did not trust TikTok, and therefore could move to ban it from the country if it so decided. And so I think that is, in fact, the question now that will be posed to the Supreme Court of the United States, should the Supreme Court take the case.
Can you give us context or examples in the past where we've really seen courts side with the government in this way around national security, that even though it is theoretical in nature, it's important enough to overcome any, rights to free speech?
So this is a very unusual case. There's nothing that is on all fours with this case. The closest case involving foreign propaganda in the United States is a case from the 1960s involving literally Chinese communist propaganda. And the Supreme Court unanimously in that case said Americans have a right to receive Chinese communist propaganda if they so want. So there's not an ideal case. I think of cases around national security, like the Pentagon Papers case, where the U.S. government said it's too dangerous for the New York Times to reveal the secret history of the Vietnam War. And the Supreme Court said, actually, no, we don't believe that. It's not a kind of immediate risk that you are pointing to. And that's what the TikTok's argument is going to be to the Supreme Court.
Do you think that its argument will carry weight if indeed it does get to the level of the Supreme Court?
Well, if it goes to the Supreme Court, I think the same question is going to be before those judges as was before the DC Circuit. Do you defer to the judgment of the political branches, of Congress and the president, when they insist that there's a national security risk and there's no other way to protect Americans than to ban the app?
What's so interesting is it feels as though perhaps the worries coming from the user base have diminished significantly. And as we're just saying, just a third of US users, or indeed US population, supports such a ban. So is there context as to how that might need to change? I mean, you're no marketing expert, but it almost feels as though the government needs to go out and make its case a little louder.
The government tried to make its case for the last 6 months. So the ban has been in place. It has been, the law has been in place. threatening this ban since April. And so since that time, we've seen the government say that China controls this app and therefore it's unsafe. But Americans have continued using the app. So Americans have decided that they don't feel unsafe despite the government's views. In fact, Donald Trump started using the app. In fact, Joe Biden started using the app. Kamala Harris started using the app. Every politician is now using the app, despite the fact that it's apparently possibly prone to foreign manipulation. Though the government, again, has said we have no evidence of that thus far.
January the 19th, therefore, it gets banned. It has to be sold. Do you foresee that being the outcome here?
I think that's becoming closer and closer to the likely outcome, that TikTok goes dark on January 19th.
Anupam, it's great to have some time with you. Thank you. Anupam Chandra is of Georgetown University Law Center. Meanwhile, let's talk about a network of Facebook accounts posting more than 4,100 political ads against Romania's pro-EU presidential candidate, while also promoting far-right figures. Digital threat research groups Reset Tech and Check First say the posts were viewed by nearly 200 million times. Facebook's parent company, Meta, did not comment on the report, but says it has not seen any evidence of major incidents on its platforms in Romania. Now coming up, Lily Lyman, _VC managing partner, is here with a look at VC funding, where it's heading next in 2025. This is Bloomberg Technology. Investment strategies of major multi-billion-dollar firms and then small specialized VC funds, well, they're showing that venture, the asset class, is kind of bifurcating here, heading into the new year. It's according to Lily Lyman, who is managing partner at _VC, joining us now from Boston. And Lily, the theory here is that you're getting two very different strategies, and not both are particularly complementary.
That's right. Caroline, it's great to be here. Thanks for having me again. I'm Lily Lyman. I'm at _VC. We are a community-driven early-stage venture firm based here in Boston. We invest at the pre-seed and seed stages in the world of B2B software. And your question's the right one. We're seeing the emergence of two very different strategies in venture, and it's bifurcating the market in a way that almost looks like a barbell. On one hand, you have these big multi-billion-dollar, multi-stage venture firms that are mega firms. They're really sort of financial institutions at this point. And I hear LPs refer to these as venture beta. On the other side of the spectrum, you have smaller funds, more specialized, targeted strategies. That's where we at _ play. And it's because that's our belief of where you can still get venture alpha, that 3 to 5, even 10x return. What's happened over the last 18 months or so, though, is we're seeing a heavy concentration of LP dollars going into the mega funds. So 80% of capital raised last year went to established managers of firm sizes over 500 million. And the representation of these firms is increased. So it's gone from about 2% to 25% in the venture market. And that overrepresentation has a lot of implications for LPs, for managers, and for founders.
Okay, let's talk about what that means for _VC. Ultimately, are you going to see more consolidation among the seed, the pre-seed stage, or actually do you need the breadth of more focused funds, and it's actually a consolidation that you have in the middling?
I think what it means is I think we're going to see, more specialization at the earliest stages. So firms like ours, you need to really lean into differentiation and get to founders early, and also back perhaps non-consensus, not obvious, both founders and ideas, because that's how you can capture true alpha. What's happening with the multi-stage strategy at the seed stage is that they play more of an index game and putting out a lot of checks and then backing the ones that are winners. But the implications of that is that they're not always very price sensitive in that, and it can dilute the entire early stage class if you can't, counter that and really dig in and go earliest and non-consensus. So that's how we've been thinking about it in order to counteract some of the implications of the multi-stage indexing model at seed stage.
It kind of takes me back to when SoftBank first unveiled their $100 billion fund, and everyone feeling that the Vision Fund was just going to give enormous amounts of money to individual founders or companies and sort of drown out the rest of the competition. Is that what happens, or is it just more that it inflates valuations? What is the real impact on those very early stage bets?
I think it can have multiple impacts. I think on one hand, the indexing can impact valuations for everyone, and so it can actually dilute the returns across the board. But on the other hand, if you can get in early, or if you can invest in sort of non-consensus, I think you still can generate that real alpha. I think part of the implications are questions for founders as well. I think we're seeing founders think a lot about who do they bring around their table at which stages of company building. In the market peak during the ZERP era, there was a lot of speed dating. There was a lot of capital that went out the door very quickly. And then 2 years later, we had a much tougher environment, and it was hard for founders. And so I think we're seeing founders, both new founders and sophisticated founders, think about what kind of investments and investors do they want around their table for each stage of company building, and thinking more about this question of alignment. What does that check mean to that firm, and how does that infer how they'll show up during the company building process?
I'm assuming that most founders you're seeing are having to lean into generative AI, even if they are not an AI-specific company. But what does that mean in terms of trying to uncover the least covered areas, or the particularly non-consensus builders and founders you want to find?
We're certainly seeing a ton of opportunity in AI, and over 30% of venture capital this past year went into AI companies, and we expect that number to increase next year. But what we're seeing is companies that are AI native, both in their products that they're offering, but also in terms of how they're being built. I think one of the things that makes this time particularly exciting to be an investor at the earliest stages is companies are being built with a new model. I think with a new capital structure, you can do a lot more things more efficiently. Engineering can be much more efficient. Sales and marketing can be much more efficient. And so I think there's a mentality of, do more with less, achieve more with less. And so in many ways, outside of a certain bucket of types of investments, like foundational models and infrastructure, I think where we invest a lot of the applied AI, vertical AI applications, I actually think you can build pretty big companies with a totally different capital structure, given the increased efficiencies of building with AI itself.
How many of them are in Boston, or are you looking across the US?
We invest across the U.S., but we're very bullish on Boston. So over half of our capital is deployed here in Boston. And it's because this is an ecosystem that continuously produces the top talent in the world. It continuously produces some of the top research and development in the world. And it consistently solves really hard problems. So things like healthcare and biotech and life sciences and financial services and cybersecurity and energy and climate. So, these three factors are part of what gets us very excited to invest in the Boston ecosystem, particularly in this age of applied AI.
Lily Lyman, great to have you, managing partner of _VC. Wishing you well for the rest of the year. Meanwhile, elsewhere in VC, a startup founded by the former lead researcher of OpenAI has raised $40 million in funding. Waveforms AI. It makes AI audio software that improves verbal interactions with machines, and is one of several AI companies developing more human-like voice features. Bloomberg's Rachel Metz is here with more. It's come out of stealth. There's only 5 people there, but it's got quite a heady valuation already.
Yeah, it's still a pretty small company. They don't have a demo to share publicly yet, but they are working on software to improve the kinds of interactions that people have with computers when we're speaking to computers.
And this is all around Alexis Kono, who was very senior at OpenAI. So I assume that even though small and without a demo, people are betting on him, his expertise and his background.
Yeah, he has quite a long tail of experience working on voice, computer, human interactions. And he was pretty instrumental in helping OpenAI build its advanced voice mode. This is the more recent version of the voice mode that works with ChatGPT, that is meant to feel more lifelike than it had in the past, more feeling like you're having a conversation with an actual person than with a computer.
Business model? I mean, the fact that we don't have a demo, but ultimately, how is this company going to be returning value to its VCs?
That is a great question. What they told me is they are going to be releasing at some point products that are both B2B and also consumer oriented. So you might imagine something like an app, perhaps, that would be for consumers from the company to kind of give people a sense of what their technology is and how it works. But then also perhaps they might work with other companies to let other companies use their software as well.
And they're San Francisco based?
Yes, that is true. They are based in San Francisco.
Rachel Metz, all things OpenAI and ex-OpenAI. We appreciate it. Thank you very much indeed. Oracle stock having its best year since 1999. It's all thanks to the momentum of its cloud business. We'll find out if that momentum will continue when the company releases its earnings today after the closing bell. Bloomberg's Brody Ford with a preview. I mean, what an extraordinary chart. It's just done so well because people are now like, oh, the cloud thing, it's actually relatively doing well compared to competitors.
There were many years that people would make jokes to me about Oracle's cloud, about how, will this ever actually be a serious player? And within the last 2 years, the answer has become yes, right? And a large part of that is because the AI workloads are so demanding that the traditional giants like AWS and Azure just don't have the capacity, right? And so it's become that Oracle's cloud is seriously taken as the kind of fourth hyperscaler, and it's been able to grow in such an accelerated way that very few other software companies can, compete with.
It's got some, I wouldn't call it key man risk, but certainly we're talking about Uber as a client, but also TikTok. And we've been talking a lot about some concerns around the deal around TikTok.
Absolutely, right? I mean, we saw the court ruling that there's increased odds that TikTok could go ahead and go poof. But there is at the end of the day, if anybody buys TikTok, the odds that you say, hey, let's go ahead and switch out our cloud infrastructure. Nobody wants to do that, right? I mean, so it is a risk for Oracle, but when TikTok was one of their only marquee customers 2 years ago for OCI, it was a bigger deal. Today, they have a lot of customers, and I think the risk isn't quite as acute as it once was.
What about other things in infrastructure and cloud provision? I mean, software, other services, what else are they managing to do well on?
Yeah, well, one that's really interesting is that for a long time, they really tried to get you to run their key iconic database software on-prem and kind of control that. And they finally said, you know what? You could run it on Azure. You could run it on AWS. And that's kind of been a pretty big, exciting thing for investors that, a lot of the world is on AWS or Azure and they want to use the Oracle database. And so being able to kind of update that customer segment, breathe some growth into the database segment, which, dates back to the late 70s, that is another thing that's been exciting folks about Oracle.
But a lot of it is probably priced in when you're looking at an 80% run up in the shares. So what do you tend to hear in these calls post-earnings?
Oh, God, we're building data centers across the world. No one's ever seen a data center build out like this, right? I mean, that's the general energy.
It's performative.
Yes, absolutely. I mean, the amount of hype right now about the AI-fueled data center build out is massive, right? You said it's priced in the shares. They are near an all-time high. And so the question is so much that how quickly are they going to be able to convert demand into actually offering these services? Because, they, just like Microsoft and Amazon, they can't get these centers up quick enough. They can't get enough chips to deal with the demand.
Well, despite the run-up, they've got 25 buys, 15 holds, and not a single sell rating. Brody Ford, all things Oracle. We'll be checking in on him tomorrow, I'm sure, after those earnings drop. But meanwhile, that does it for this edition of Bloomberg Technology. You don't want to forget our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.